Good morning, everyone. It's Harry Swaminathan. It's August 3rd, Saturday morning. Happy weekend, happy Saturday to everyone. It's about 8:30 a.m. Eastern Time. Since we had a lot of subscribers this week on the trading ideas, I kind of wanted to give a little brief around what exactly the service is. I've got a lot of questions, and that's all great questions. So I thought I'll pick out the common questions and see if I can answer them so that the whole focus or the philosophy of the service becomes a little more clear. So, one of the first things I get asked is, okay, you're putting all these 30 contracts and 40 contracts. What about commission costs? Yeah, that's a great question. Now, the commission cost is a function of the number of contracts. Remember, so if I put 40, you don't have to put 40. I mean, the returns and everything is the same, regardless of whether you choose one contract or 20 contracts. So, and your commission costs are also going to be the same. I mean, it'll be scaled similarly because commission costs are a function of the number of contracts. So, while I'm putting 40 contracts, I think many people might be putting just one or two contracts, and that's fine. So, the idea is then what that also ties into is when do you exit? So, what are good, at least you want to create some mental markers as to what are your good exit points. So, what I would say is if you have a 10 contract spread, 10 contracts, I mean, rather, if you have a one or two contract spread, if you have a profit of about $100 to $150, that's not too bad. I mean, you got to take it. So, and consequently, if you have a 10 contract spread, I would be looking for at least $500 to $1,000 profit before you can exit. So that, commission costs in general should be a small percentage of the profit of the trade. So perhaps 10%, 15%. Once it starts going above 20% of your trade, then that becomes a little excessive. So just between 10 and 20 is fine. I think 10 is going to be the minimum. You can't avoid it, unless you hit a blockbuster of a trade. But otherwise, 10 to 20% is fine, and then you can choose when to exit. So for example, here on our EEM position, I've got 30 contracts. So I'm waiting for $1,000. We actually had it a couple of weeks ago, but we didn't take it. But I'm looking for about $1,000 profit on this, and once I hit that, then the minimum I think has been met with, and we can exit at any time. Now, obviously, commission costs are not the only criterion when you choose to exit. Obviously, if we feel that this thing has more ways to go on the upside, then definitely keep the trade on. But in general, that's how you would choose it. The second question is, many people have been saying, hey, the Herbalife trade is not working out, is not working out. I think you have to understand earnings trades are speculative. So many people got into this trading idea service during the earnings cycle. And if you did put the Herbalife trade on, you have to understand earnings, it can go either way. So, and if you don't get the move that you're looking for, then it's going to take some time to fix it. On the flip side, if you get the move, like for Facebook trade or on Netflix and Apple and all of that, we were able to exit in one day right after the earnings. But if the trade doesn't go your way, then it's going to take some time to fix. And you can easily see, I mean, we just have a loss of $1,800. Obviously from all the other earnings trades, we've made 10 times that. But that's not the point. You want to try to salvage this. Like I said, once you learn how to fight for these losers, that's when you really learn. So the Herbalife trade is going to take a little time. The problem is Herbalife has been basically around that 63 to 65 level. And, once it starts making a move, then we also make our moves. But, it will take time. Like I said, ideally, I think I want to put it at I want to get this trade to a short strangle at the 55 and 75 level. That's my goal to do that. But, obviously we are not there yet, and, we'll have to work our way towards that. So that's as far as the earnings and speculative trade. So whenever you have, earnings, you do, of course, now we are coming to the end of the earnings cycle. Next week is probably the last week of all the stocks that we follow. But after that, we'll come back to that in October again. So, but whenever there's earnings trades, you have to understand it's highly speculative. It can go either way, and if it doesn't go your way, then it'll take some time to fix. But that's the whole point. Even when you're doing an earnings trade, that's why you need to, always give it that consideration. Okay, what happens if it doesn't go your way? And so you have to construct your trade properly. So even though our Facebook and Apple and Netflix all went our way, we always had a backup solution for that. What happens if it doesn't go your way? So all of those trades were constructed with a backup solution. So that's as far as earnings trades are concerned. And then we had a lot of questions that okay, there's a lot of day trading kind of adjustments and things involved. Again, those involve mostly the earnings trades. So there are two categories of trades. There are the monthly income strategies, and you have the weeklies or the earnings or the speculative trades. So those two are completely separate strategies. What we are dealing with, especially with Herbalife and LinkedIn, for example, is that we have some these are earnings and speculative trades. Now yesterday we've already booked profit on LinkedIn of about $1,600, but we're still working on this position, and because it's an earnings trade and because it's also coming close to expiry, these things require a more active approach. However, what you'll see is, you can see the FedEx, you can see the Google, the Goldman Sachs. These are not your day trading kind of trades. Granted, we do have to do adjustments every now and then, but these are things that we keep for the longer term. Longer term meaning a monthly cycle. Now, EEM, I've already held on to this for about 3 weeks or so now. So over the next couple of weeks, I'll be looking to exit, because you don't want to keep holding a position for too long. 4 to 5 weeks would kind of be the maximum, because you have to understand, if you don't get your move within 4 to 5 weeks, then there was something wrong with your trade analysis, and that premise that with which you went into the trade does not hold any longer. So you need to try to exit. So EEM is coming to that point where if we don't get my $1,000 profit in the next week or 10 days, then I'll be happy with the $500 profit and, just exit the position, because the trade rationale is not going to be valid for more than 4 or 5 weeks. So if it doesn't happen by then, you would want to exit the position. Now, however, the FedEx, Google, and Goldman Sachs, these are a monthly strategy. So, we would expect to hold this for about 3 to 4 weeks more, because all three of these, we've just gotten into it. I think Google is about a week old, but otherwise, FedEx and Goldman Sachs, we've gotten into it recently. So, you would want to hold on to that. Okay, so that's as far as the monthly income and day trade. And whenever we take the weeklies, remember, the weeklies require a little bit more active monitoring. So, if you don't have the time, then you want to stay away from those trades. And just stick to the monthlies. But the trade service, the trading ideas, primarily consists of 70% will be 70 to 75% will be trades like these, which are monthly strategies, and we'll open either a debit spread like the EEM. We could go single long options or calls or puts, or we can do just simple credit spreads. Very often I tend to turn it into an iron condor, especially when there's some move in your favor. I tend to turn it into an iron condor, as you saw in Goldman Sachs. But that brings me to my next point. The turning a credit spread into an iron condor is just a way of managing your profits, and I tend to prefer non-directional strategies. So when you do have a credit spread, you have a delta, whether it is a positive delta or a negative delta, but you do have a directional bias. The directional bias is not as strong as when you have a debit spread or a long option. However, you do have a directional bias. And so when you get a certain profit, like in Goldman's case, we were able to get a profit of approximately $500 from the bull put itself. And so when we got that $500, now I'd like to protect this, because in the case of Goldman, you can see the maximum profit is about $2,500. including this. So, we still have $2,100 profit left here, and we already have a profit of 535. So the total is 2,500. So now if you wanted to protect this 500, you would want to enter on the other side. However, if you think that's not a good strategy, you don't have to go for this, the adjustment on the other side. If you feel you just wanted to you were satisfied by just letting this expire, then that's fine. You can leave it at that. However, my preference is generally I would tend to do an adjustment that sort of protects this. And the way it protects it is if Goldman goes down, then now the adjustment that you made is going to be profitable. So yesterday, Goldman did go down a little bit, and this spread was actually up about $200. But by the end of the day, I think the markets also had come up. So, so it gave back a little bit, but that's fine. So that's, as far as the adjustment strategies are concerned. Now, if you also think that the spreads are a little too aggressive, you can always put it back about $5 or $10 behind. So when I put the 150, 145, I know a couple of people that put 145, 140, and that's fine. So it depends on your risk tolerance and actually how much time you have to look at the markets in case an adjustment is needed. So think about both of those issues before you pick your spread. The trade rationale is going to be valid. Now, if I pick the 150, 145, the 145, 140 is also going to be valid. The only thing is you're going to get a little bit of a lesser credit. So if you think the risk reward is okay on the 145, 140, by all means go for that. And then that's what I had. So we're coming to the end of the earnings season. Next week there'll be a couple of more trades. I think we're looking at especially two exciting stocks that are reporting next week are Priceline and well, I don't know if Groupon is exciting, but Tesla is reporting. So Priceline and Tesla are reporting next week, so we'll definitely be taking a shot at that. But bear in mind, these are earnings trades, so if it works, it'll work very well. But if it doesn't, then we have to babysit it for some time. So hope everyone's having a great weekend. I will speak to you on Monday. Thank you.